Okay, so in today's session, what I'm going to be doing is I will be analyzing the markets live for you, provide you a couple of signals, and I actually have a lot of them. I've been really looking over the markets on Sunday evening and today morning. So basically, I will analyze the markets. I will show you a lot of very important information that you all can start using pretty soon. But I do have a little surprise for all of you that I'm pretty sure you'll all be very excited about and you all want to participate in. So what I'm going to do is I'm going to go over some tips, obviously rules, and as always, I'm going to show you how to manage your risk better. To begin with, I'm going to go straight into the system and just set up my chart before I start speaking about risk management and pretty much a lot of other things. I'm actually creating the system that I'm going to be calling System 23. This system will obviously be compiled with the 23 rules, but it will also have a couple of other things that well, you all will find pretty interesting to use. The system basically, this system will take some time to understand, just like anything else. It will definitely take a lot of practice from you. And in order for you to use it, you're going to require confidence, discipline, and dedication in order for you to profit from this. The parts that compile the system are the 12.5 levels. And most of you know about this. I'm going to be using free exponential moving averages. I'm going to be using infinity trend lines, obviously compounding 4-hour trades, but I'm going to compound. Many of you have been asking me how to compound, when to compound, and things like this. And these are all excellent questions because most of the time it's pretty hard to actually do it. Because let's just focus on the market part, let's say over here. And just for the sake of explaining, let's say you start selling over here, and here's your first sell, here's your second sell, and you're obviously moving the profits down, and here's your third sell, and before you even get a chance to open the fourth, you're already back up before price broke back down. So these are all excellent questions, and I'm going to attend to them right now, and I'm going to provide to you a much more simpler system for you to use to enter trades. Obviously, the ABCDE part of the Elliott wave system is going to be implemented into this. Risk management, goals, consistency, and a couple of other things. But since these sessions will run for 3 days, today, Wednesday, Friday, I'm going to do my best to explain all of this in the best possible way I can for you. But before I continue talking, actually, you know what? Let's just get into this, and then I will explain how to use all of this. The first thing we want to do is go on our monthly levels, and let's start with the euro dollar. We went this. I want you always, when you're doing this, sometimes the market will actually stop you at 2005. You see, the furthest I went is April 1st, 1989. I want you guys to do that. The way to do it is to click and pull, click and pull, and it will take you all the way back here. Do it on a monthly chart. It's going to be much easier for you. We're going to use the Fibonacci retracement real quick. I already have it set up. So if anybody doesn't, I want you to take a screenshot of this screen right now, so I do not have to explain or tell you the full numbers. So just take a screenshot. If you don't know how to do it, it's on your keyboard. It says PRTSC, most likely. Just press on that, go into Paint, Control V, or right click and paste, and it's going to pop up there. Now what we're doing here is basically we're using a mathematical point. There are others that I'm going to teach you. There are other levels that are very important to use, but for now these are just simple resistance points that we want to focus on. We're going from 0 and we keep adding 12.5%, and we all go all the way up to 200. What we're going to do now is just get the tops and the bottoms. We'll just see how this works with the trend lines, and this works pretty fine over here. So we'll just move this down, and we have most major hits like here, 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 even here, here. We've got these ones. These are logical, and when we zoom in, we'll be able to see even more here, 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 So there's plenty. There's plenty. Just make it a little easier for us to see. Okay, there we go. Okay, so we went to the monthly chart. What I'm going to do right now is go down to the daily, and I'm going to explain to you why I'm coming to the daily. Right now, what we're going to be doing is adding the exponential moving averages. We can do this by going here, trend, there, or just write expo. And once you put expo, you'll get this, and we'll begin with the first one, and that's the 20. Now, it is essential, very important, that you use this only on the daily chart. Only on the daily chart. Because what we want to do is get a short-term period of 20 days. We want to make this just a little lighter for us so we can see it better. Okay, so this is the 20-day one, and I'm going to explain to you what we're doing. I've done this so I can make it easier for you all to compound and use this even more. The next thing we want to do is get a 55-day average, and we can use a dark red one for this because it will separate from the light red. And the last one that we want to put in, and this one's very important, is the 987. The two are pretty much self-explanatory, the first ones. The last one, this one, the purple one, I always put this as purple, a bit lighter purple. Okay, here it is. This one here is basically the orbit of the sun. Okay, so basically we're using something a bit different, but I'll explain this a bit more next time as well. I just want you to pay attention to the movement, and once we go back, this is going to move a little bit, but it's just in order for it to load everything. So we'll just go back a little bit properly, and I want you to see the movement of price. Keep in mind these are daily charts, so when this breaks, that's 1,000 pips and break, and that's pretty much a lot here. There are small breaks, but even those small ones are still 200-300 pips. But we need to combine them with something, and I'll explain to you what we're doing pretty soon. Okay, so logically what we're expecting right now is for price to meet this line here. On euro dollar, this doesn't always work as a resistance. Many times it will break right above it, but I'm going to come to the signals soon. The general rules of this is that if price breaks the 20-day moving average, yes, correct. The last one is just a sec. The last one is 987. 987. I'll explain this. I'll explain all. You're very welcome. I'll explain this all to you. I'll say it and then I'll explain it with live examples. Once price breaks the 20 moving average, we either sell or buy. We wait for the 55 breakout, then we continue selling or buying. Basically, compounding begins at 55 days. Okay, so here's the trick. I told you this many times. I've been in the industry for a very long time. I've seen people trade a lot, and you don't have to take my word for it. Most of you've tried scalping, and most of you've lost a lot of money. Whether that's demo or gifts or your own money, you lost. And I can tell you I've seen many other people lose as well. Now, that's not only because of scalping. That's also because due to poor risk management. Nobody explained to you risk management. And even when somebody explains risk management, they usually don't know what the hell they're talking about because they've actually never used those systems. So there is a lot of, and I'm just going to send out a quick warning here, and that's there is a lot of information in this industry. There is a lot of it. People are constantly trying to sell some nonsense around, and that nonsense is not even used by the people who make it because it doesn't make any money. A system, a trading system, needs to be complete. How is a trading system complete? When you can explain your trading system to your kid who's under 15 years old, and he or she understands what you're talking about, then you got a good system. A system needs to be simple. A system needs to provide proper and consistent entries. Those entries don't always have to make you money. Okay? And I've explained to you guys why many times losing is actually more important than winning, and I'll come to that at the end of this session because I prepared something very important to explain to you at the end of this session. But I'm just going to take a quote right from there, and it's actually said by a gentleman called Barry Plattner. He said that good judgment comes from experience, and experience comes from bad judgment. Now, I'm going to come to risk management, and I've even written a story for you guys in sort of an example of 3 different people trading. And then you guys are going to understand the essence, the importance of risk management. But let's go into the system. First of all, we're looking at these levels here, and I've added them actually wrongly, so just a second. They're actually moving, I think. Yeah, they're moving, so just a second. Okay, so these are the 12-point mathematical areas of interest. There is much more to this. There really is a hell of a lot. But I don't have the time to do this properly right now, but very soon I will. I've promised you all that the course will be starting. By the end of this month, you will have all of the information for the specific course, and a lot of pretty interesting things are going to be connected to that course. So you'll have a lot of very impressive information. Basically, I've set myself a goal, and I've always liked helping people and educating people and turning people who were just like myself before, who had no idea about the financial markets, into somebody knowing how to manage their own funds, make money, and turn basically change your life. I mean, this is a really fun thing to do, and it is really the last frontier where somebody can actually make a really good amount of money with obviously a lot of effort. I'm never going to tell you that this is easy. And if anybody tells you that it's easy, they're lying to you. And they obviously don't know what they're talking about. For example, the gentleman that was holding the last session, Richard, he was just like me. We both didn't know anything about the financial markets. But with testing and trials and practices, I'm sure you guys heard him. He's excellent. The guy is everything I wanted to have here, and that's basically the idea of surrounding yourself with the people who are like-minded like you, going after the same goals. And there's many of you. Many of you I don't know. I see names here I really don't know, but the people that I know, I really want you guys to be a part of this for a very long time. And I know, I don't hope, I know you're going to learn a lot, and I know for a fact that you're really going to make a difference when it comes to your financial futures. And not only, you see, the money that we generate in this industry is just a side effect of excellent deeds, of trials, of overcoming challenges, of doing things with fear, of learning how to be more disciplined, and much more. So the 12.5 levels are mathematical points of interest. We're going to go in depth into these and other features in the next session. So I'm going to be specifically devoting not only for this, but I'm going to explain to you other points of interest that can be used to determine where price could vibrate back down or vibrate very highly up. The next point we're looking at is the exponential moving averages. Like I said, the 20-day is the gray white. Let's say this one here, that's the 20-day. The red is the 55-day, and the purple one is the 987. The 987 is essential, and I already have them ready here under trend. So I'm just gonna come here, remove all of this, and I'm just gonna do it like this so I don't have to add them again. But I'm gonna show you just so you guys see that they are what I'm saying. 55 red, 20 gray, and finally 987 purple. So the purple one, We're actually on a month, so let's go down to daily, and we'll go on daily on everything. I'm going to show you examples of using this combined with everything else and how it can actually do something for you. But I don't want you to just rush into it and start using it from tomorrow. Start understanding it, sure, but wait for the next sessions and wait especially for the course. And I'm going to tell you just very quickly what the course how long the course will be, so you can understand how much important information there will be there. But more importantly, I want to tell you this. I can sit here and even face to face with you and show you and tell you and guide you and tell you and tell you and tell you and give you all the books in the world and all the things out of my mind and put it in your mind. Unless I do not motivate you to stick and follow the rules of trading, every single system that I'm going to teach you will be useless. I told you before that just a simple moving average can make money if it is combined with proper trading rules. Trading rules must be followed, and I know I've given them to you, but they're going to be refreshed inside your memory. And the course that I will be doing is basically turning an egg into an eaglet and an eaglet into an eagle. That takes, for the egg to hatch, will take about 35 days. Okay, so that's a course for 35 business days. Obviously, they will be live, but they also will be recorded for the individuals that will be joining the course. After that, once that is done, there will be a course that will last between 10 and 12 weeks. Once that's done, there's two things. You trade by yourself or you trade in the team. The team will basically be a team where I'm going to actually finance people as well to trade. And there's a lot. I just don't want to go too much detail into it. But if you are dedicated to learning the financial markets, I'm extremely dedicated on teaching you. Okay, so let me just set up all of these charts up here. But while I'm doing this, I want you all to just think of a pair that you might be interested, or you might be trading, or you might have open positions on. And just tell me which pair it is, and then we'll do the analysis on that one. And well, I just want to help you out. So if you have any pair that you might be interested in, just let me know. Aside from the majors, I'm going to do all the majors. So again, trend. Okay, Johnny, Euro JPY it is. Okay, so guys, you see, daily chart, daily chart, daily chart. We're just adding the moving averages now. USD CAD. We remove everything. We go trend, daily chart. Zoom out. There's the purple line. New Zealand JPY. Let's remove this. Trend, USD CHF. That's done. We'll do that, Richard. Let's remove trend lines. Oh, come on. Okay, USD JPY. We'll remove all of our trend lines. Okay, I'm not watching the screen if anyone's typing. You just have to give me some time so I can just finish up with this. Just so I don't waste too much of today's time. Okay, Heather, I see that. Euro GBP. Get out of here. Okay, so let's go with the first one, and that's Euro JPY from Johnny. So I'll show you how to do this properly. You know, it's really important that all of you understand what I'm doing. Now, when you go to shorter time frames, let's say like 4 hours, you need to understand that these moving averages, they're doing a totally different job now. They're not doing what they're meant to do. So you cannot use them unless you find a pattern, unless you really study them and find a pattern that you could use. I really don't recommend using this one on this because it just takes so many candles into account, and then just, you know, it's a mess. I also don't like moving averages that are too close and they switch too quick. So I would also not recommend you using short-term ones. The reason we're going on the daily is because we specifically want to just get the 20-day, the 55 days, and the 987 days. So I just want to show, let's just review this very quickly. I want to show you by going back in time a little bit the power of the purple line. Most of the times when it has broken, it's created either long-term buy trends or short-term sells. All of this, not always, because if it worked always, you know, all I would have to do is give you a moving average and tell you, hey, buy, sell when this happens, when a breakout happens, and I'll be sitting here with 38 millionaires, you know, or even billionaires. So you see there are breakouts here, but I want you to understand the size of the breakouts. The size of the breakout, even I'm going to go down here, is almost 300 pips. Okay. We need to get patterns involved as well. We need to get head and shoulders here, 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 head and shoulders down. Trend lines. So much. There is so much to do here, but let's just make an analysis of Euro GBP, and everything I'm going to be speaking about here is long term. The reason I always tell you to take small risks, and today I'm even going to emphasize on you not exceeding 0.75% risk. But we're going to come to that pretty soon, and I'm just going to show you. And I want you once again, and I'm sorry, I know you all like the platform, and I love it as well, and believe me, I can't use another platform because I like it so much. I just want you to ignore this. This here, 29% of the client account, 71%, blah, blah, blah. It's just nonsense. It's just C-Trader. It's not all the other platforms and all the other traders. So this does not help you in any kind of way, and it will never make you money. And any broker that has this kind of thing, don't follow it. And if somebody's selling you something like this, don't buy it, because it's nonsense. It does not make you money. It will never make you money, and it has never made anyone money. And like I said last time, you have more chances of just blindly going sell or buy. Okay, so I'm going to explain to you this. What we're looking for here are crossovers in price. We don't want to enter too quick, but I'm looking for a crossover, and I found one here. And I want you to pay attention to this. We have the purple line, and this is essential. We do not come close to purple lines that often. And I want to show you, for example, here. There's a breakout here, and that is, let's put the date. That is 2013, January 9th, 2013. The next time it came close to it is 25th of January 2015. That's over 2 years. So when we are here, that's really important. And these are daily charts. So each one of these candles is 1 day. So this is one whole day of trading. This is another. This is today. This is today. That's it. Nothing else is today. So these are daily charts. So then they'll go pretty slow. But yeah, let's go back. So I'm just going to explain to you how to use the moving averages and what you're going to be doing. This will not work every single time, but it will work many times. And with the correct risk management in place, and once I explain to you all exactly how to use all of this, you will make money in the long run. If you follow the rules, if you have a stop loss. There are many ifs, but the biggest one is a question. Are you dedicated towards making money, towards learning, towards having confidence in opening trades, towards not even worrying about being in red for 10 days or 20 days or 30 days? Being in the red can be really scary sometimes. And using good risk management, that's gonna take a lot of weight off your shoulders. Yes, you're gonna make less money, and you can say, oh my God, what if I just missed 25%, 0.25% more? I would have made much more. But shoulda, woulda, coulda. Shoulds, woulds have never made us money. They can teach us lessons, but it does not mean next time we should increase our risk. We should only increase our risks when we earn the right to increase our risks. But we'll talk about that soon. So, price stagnation, price is going up, we don't touch, we're not touching nothing. And I'm going to add, actually let me just do this right now. Just a sec. Okay, we went all the way back to 1989. Now, as you see, this line is kind of sticking in the middle. Once it's passed, here, massive drop. Past, rise, drop. There's a drop here as well, but these are monthly candles, so this is a lot. This is really a lot. Even from here, from down here, that's 400 pips. You can just imagine what this is, for example. But it's, you know, who's going to stay into this? Most people will cash out much quicker. So, here we go. Let me just add this real quick. Okay, let's go back to our daily chart. Okay, so this is a pretty important area of interest, since it is the 75% area and price has broken it once before, twice. But if we go on the line chart, we'll realize it's pretty close. You see, it's not a big difference in price. So that's one reason price is going up. We have a full candle here, a full candle breaking our first point of interest. And what I'm going to do for everyone and show you this, and Johnny, I'm going to do the analysis as soon as I finish explaining what I'm telling you to look for. So we have the first breakout. This necessarily won't always work for you. The reason I'm telling you to have a bigger stop out is because price started here, went all the way down here. That's 65 pips from the opening of that day. Breakout here. Let's say you're buying here, but let's say price drops back down. It's 118 pips. The only way you can have a 200 pip stop loss is by having a small risk on your trade. And for the beginning, this is really important, because what you want to do is gather up as many pips as you can per trade. It's not about opening quantity of positions. You don't want to open tons of positions, because the more you open, the more you're exposing yourself to the law of averages. And the law of averages, and I'm going to talk about that soon, dictates that you eventually will lose consecutively. And that's one thing you don't want to do right now. Anyway, we're breaking first line, and that I'm going to add the first one. And I know I'm talking about the past, but let's just stick to it for now. So here's the first entry, first breakout. You do not open till the next one. That's the purple one. Did not break here, broke here. You wait for a decent breakout, preferably for even price to close out on the next day, which would cause you to be in the red all this day here. You would have been red all day, unless you open down here. But chances are we would open somewhere there. So we would be in the red the next day. But the day after that would be in a small profit. The day after that would hit something interesting. That's when our second trade is open. This is long-term compounding. This really pays off. Because if you can grab it around 6 trades on this, you're looking at a massive profit, even with a 0.75% risk, or even 1% risk, or even 0.5% risk. So the next trade is open at the red one. We get the breakout on the red, and that's our third trade. Once you break the third trade, you then can compound. Well, you can compound pretty well, but I'm going to try and show you this live in person and then document it as it happens. The distance between these 3 trades is not always the same, and the reason it's not always the same is because these moving averages will move in different patterns. But they will also allow you to let your positions breathe, and this is very important. You need to let them breathe, And what you remember how we do compounding? We'd open a trade here. Once this one's open, we'd move the stop loss of this one down. We'd increase the take a stop loss of this one here. Once the third trade's open, we'll move the second up, the third up, and add the first, second, and then the third to go in minus. And then you could do whatever you want. I want you guys to understand something, and that's very important. The market will never move in one direction for many consecutive days or months or weeks or days or hours. There will always be retracements. So if we're looking at on the daily chart, we'll see the same exact thing happening on the 4-hour chart. See, it goes up and down, up and down, up and down. And that way it can take us out. It can take us out of our trades, and that's the last thing we want. We want to be in them as long as we can. And professional trading will require you to lose. Let's say you're up 120%. You can close out now, or you can risk some of your profits, let's say 40% of that, 20% of that, even 50% of that, to try gather even more. Because the idea of trading, successful trading, is when you're winning, you need to try and maximize those gains. Not by increasing your risk, but by covering your risk. Because you know with compounding that once the second trade is open, there is no more risk. We forget about risk. So once that's done, you would have gathered a lot of pips. Breakout here, you could even try your luck at this trade. Chances are you'd make a small profit because you would never open the second position. You could move you would not wait in front of a computer for too long. You would either take a loss or a small profit. But that's fine because you made money here. Price shoots up. What do we do here? We buy. The reason we're taking small risks here is in order for us to try out as many breakouts as we can on this. Now, I want you to focus as well on the 87.5 level. And as you see, price did come to it and head back up. So maybe you would not really want to take the sell here, but in case, what you would do is wait, add your alarms. You see, we just added an alarm here. We'll get an email if price breaks these levels. You see, we'll go here and we'll choose not email statement. Where is it? Price alerts. Okay, yeah, we'll get an email. So if price would break any of these, you'd get an email. Or you could even put a pending order in there. Let's say you put a pending order in there, and you would already add your stop loss in there. And you don't really care about the take profit because these are pretty long trades. Okay, so that's a given. You could test your luck. I'm not telling you not to do it because from the breakout here to down here is 60 pips. That's still good. I would also recommend you to, once you're about 20 to 50 pips in profit, to move your stop loss to break even or a small profit, 5-10 pips. It's always better to grab that than risk your position. Now, the reason why you would not be so active on this is because it's a daily chart. It would really allow you to learn something, and that's patience. It would really teach you how to be patient and wait for signals to actually occur. Quality signals. If you do this, I'm telling you, you're going to make money. But we'll let speaking on the side and we'll let actions prove things better. So, price breaks, bounces off our 87% level, you could buy. And since this is a daily chart, you're looking at massive gains. We have a break, okay? We have a break. This is obviously the weekend here, okay? It's Monday. Whoa, price actually opened down here, okay? So there was a huge gap here. So there was a huge gap. That's a 300 pip gap, and then a rise. But you would still be in the money, even if you opened up down here. Even though it rose that much, the next day you would have made some money, made more, and then there was another gap. As you see on the next weekend, really big gap. Look at that. It's a 200 pip gap until we came back to the next level. Okay? Once we come here, you can either try out your buys using your using your 12.5 levels, or you could always wait till the moving averages Obviously, when price is moving around them and they're this close to each other, you forget about this pair. You don't touch it, just leave it. Once there is a breakout, you can always add in your alarms and review the pair from time to time. These are daily charts, so you don't really have to do it much. So price breaks. These are big moves. These are really big moves. See, that's 200 pips moves. Here's the first one going down here, then down here. These are pretty interesting things. But let's forget about that and let's give Johnny what he's waiting for. Okay, so we're at the 62% level. Let's just see when was the last time we were there. The last time we were there is when the uptrend occurred, and that's when this line was broken. Now, I want you to pay attention that this line was here broken. Okay, the purple was broken, and that's a pretty strong drop. Johnny, do you have any open positions on this? And if you do, are they buy or sell? Sell. Okay, and can you tell me how many pips in profit are you, or the price you bought you sold your order at? Oh, you're fine. I'm sure you're fine. And do you have a stop loss, right? Good. Can you just do me a favor? Can you just I'm just gonna open a position real quick. Okay, can you go here for me on this little wheel, and then tell me what percentage of your balance does it say that your stop loss is at? Okay, that's fine. 1.48%. That's good. This is good. This is good. That's really not much. That allows you to trade quite a bit. Well, look, Johnny, I'm going to tell you like this. I can see price dropping. I just want you to just pay attention to this this area right here. And I'm just going to hide my orders just so it doesn't bother me. You see, we did have one test, we have two tests, and we're right now at the third test. We did cross this beautiful purple line that I wait so much for, and you all will be very happy to know that it's actually happening on many pairs. And the reason that's happening is because we're about to change cycles. Cycles change between 2 and 4 years, sometimes even 7 and 9. So there's a lot happening in the market, and I'm telling you, it's really interesting. I'm really happy that I'm back right now. I did miss out on a couple of things, but it's okay. So I do believe that the price could break this level because we're at the third test already, and you could even call it the fourth test because we didn't have this here. But let's just count this as one. That's 1, 2, 3. Yeah, long-term wise, you could be seeing pretty interesting drops, because the last time price, let's just review what happened here last time. Really passed right through it and then created a really long uptrend. Now, why I'm saying price could go down, it could make a retracement, okay, back towards this level before dropping again. Let's say back to 123, maybe 124. I don't know how many pips that's away. That's about 100 and something pips. But I think that the moving averages will catch up with price. I think that you could expect movement on this within the next 2 days, maybe 3. The yen is really strong, and it's really changing cycles. It's really going into something really powerful could happen here. It would be a shame if you would get stopped out. So if price starts heading north towards your stop loss, what I could recommend you to do, if just so you don't have to increase your risk, what I would recommend you to do is close out partially. You see here, if I had a stronger position, I could close out partially. Okay, so if this was 0.2, you see I can add on. But you could remove a bit of your position if price starts heading upwards, and then you could move your stop loss into pretty much the same risk. You understand? Because you would leave a smaller position open. If you don't understand, just tell me and I will try and explain it better. But I think that price will break this level, and I really think that you've opened an excellent position here, and I do believe that you're going to make some good money on this. If you just don't get stopped out, that would really suck, but it's okay, it happens. Is that okay for you, Johnny? Okay, great. Thank you. I'm going to go right now to Heather real quick, and then I'll go to Richard. Euro GBP. Euro GBP is really a really interesting one, and I'm going to talk to you all about it right now. Okay, we're fully loaded. Okay, so let's go back to the daily, and here we go. We did cross the purple line, but it's acting. I just wanted to show you what happened before. You see, it has crossed it many times, but then it does stagnate. So every pair acts differently towards moving averages, closing prices, and things like this. I do believe that the pound is going to be really strong this year. I already told you all that I think that the dollar is going to get its ass kicked, and it's already happening. We've sent out a signal before that if GBP would cross the 45 level, you should buy, and it's crossed it. It's crossed it well, and it's going up. But let me just go back to Euro GBP. So it's having a hard time breaking the 20-day moving average, which usually acts as a short-term support and resistance level. Many times you'll see price just jump with it, just like you threw a ball onto a staircase. So if price does not break this level and head to the 112.5, then price, if it breaks this level, it will break this level, and then we're looking at the 100% level. Heather, do you have any open positions here? And if you do, what are they? Buy or sell? Okay, none at the moment. Good. Okay, what I would advise you to do is pay attention to this. If you want, do add your areas in. Even add signals, alarms. You see, you can add an alarm. Here it is, send email. You see, it can send an email. So there's one. And then what we would do is add the next one here. And once price breaks, you can even add a note in there and it will tell you what it is. So once price breaks these levels, we will come back to this pair and look at it. Well, it's good you're looking at selling, because I really believe that the pound is going to be much stronger than the euro, and I'm going to show you guys why later on. But it is definitely an interesting turn of events. So I just want to show you this again. You see, it did break it a few times, but okay, this is not proper breaks. But I want to show you once it did break it. 27th of October 2013. It took it many years to come back to this level, but it allowed it to drop massively downwards. So, Heather, you remember the rules? There is a rule that says be just as ready to buy as you are to sell. Do you all remember that rule? That's rule number 18. Yeah, rule number 18. Be just as willing to sell short as you are to buy long. Let the objective be to keep with the trend and make money. Possibly, Peter. Possibly wave 2. I didn't really review it in that sense. but I will later on. I will later on. You're very welcome, Heather. I really hope this helps. And let's go to Richard now real quick. Richard wanted the USD and the Swiss franc. Well, that's beautiful. You see, this is really beautiful because what we needed, you can see that the purple line here, obviously forget about this. Um, there are interesting moves once price breaks these levels. I want you just guys to be a bit weary of breakouts that happen on Mondays. Okay? This is a Monday breakout. Why is it a Monday breakout? Because there's a massive gap. You see, price broke and then opened up 80 pips north of where it was supposed to open. And obviously it went just right back up. So let's just open the monthly chart and just do this real quick. Excuse me. Okie dokie. So here we go. Well, Peter's asking, but is it a breakout until the candle finishes or when it breaks the moving average? Okay, that's a really good question. With using a smaller risk percentage, you see there are many fake outs. You guys seen them, they happen all the time. Price breaks, you see like here, this is not a very big move, and then just moves a couple of pips down and then back up. But this allows you to just rebuy it. So what I would recommend to you is to have two different entry strategies. But I will speak about entry strategies on Wednesday. Entry and exit strategies. So you guys understand when you should exit and when you should enter. But basically, let's say you have two strategies. One would be waiting for more specific moves, let's say a close of the candle, and then buying or selling, or just go with it. But just go with it is, what I mean by just go with it is price breaks these levels, let's say like now, and I just go sell. And then I just you see like this. You see the candle didn't finish yet, the day didn't finish yet, and I'm selling. You see, that's 0.28% of my balance. That's what I would recommend you to do. If you are just testing it, and you could do it because in the long run you would make money, but managing your trade is just so much more important. The last thing you want to do is take profits quick, because then you'll in the long run you're just going to be losing money. What you want to do is test it, okay? You take a very small risk, but if price starts going in your direction, you slowly but surely start compounding a bit stronger and maximizing your profits on this one. But it's very important that you make money. When you make money, you don't just close out a position just for no reason. You guys need to remember the rules. Rule number 4 is never let a profit turn into a loss. Okay, that's very important as well. But also, never wait. Which one is it? I forgot. It's I think avoid taking small profits and big losses. So what we want to do is if we're risking 0.28%, we want to double that at the minimum pace, but that doesn't really mean much. But again, I'm going to explain this to you a bit better on Wednesday, entries and exits. Right now I'm telling you that you could do this, but I really recommend lowering your risk to as low as possible until you understand how to work it and read signals. For example, USD CHF. This doesn't work great with USD CHF, especially the purple line does not work very well. You can even see these lines. It's too volatile. There's too many spikes. Richard, as for you, this is a pretty tough call. I can't really tell you much. I really don't know what to say on this one. I'd rather not give something. So, yeah, and I can't give you anything on this one. I'm sorry, Richard. Paddy, absolutely. I could go over USD CAD, and I will right now. Do you all remember when I gave out you the signal in that workshop for USD CAD based on this over here? I told you to sell, and it was right on this candle. Good. Okay. Well, look. The reason I was even looking at this the other day, well, not the other day, last night. The reason I'm a bit scared of entering this is because we were really trailing these moving averages. Yeah, we're coming closer to this one, and I think I told you this before. I really believe that. No, yes, I did. Me and you spoke on the phone or on Skype, and I told you that USD CAD would continue going down. I think that was like 3 weeks ago, something like this, or 2 weeks ago. Right now, Fabi, I do believe that it's going to continue going down, but there must be a retracement soon. And a retracement, as you see, does really go pretty high up. That's like 300 pips, 200 pips. Oh, you had a bite, Johnny, huh? Well, Paddy, look, I'm going to tell you like this. Cycles are changing in the markets right now. This is one of the best, not the best way, but one of the. Yes, it is. Yes, it is. It's good for you. You're in Canada, so that's good for you. I believe that the cycles are changing slowly in the financial markets. Not good for you. Okay. Okay. Well, I really hope it turns around, but it looks like it's going to come in the next week or two towards the 123. It could go back up here because right now we're at the 50% level of this, and I'm going to show you. That it's clear with the eye. So here's the 50%. You guys see it. It's right there. And it's touching it right now. The 50% usually works as a turning point back up. And I'm going to show it to you again. Here's the 150, which is the 50. And we go here. Price touches it and drops back down. We go back here. Price touches up. Price touches up. So there is a very good indication that price will go up. Yes, they are, but the CAD is pretty strong. You can expect tomorrow. Yeah, they are down. Yeah, I did see that. They're right here. Here they are. But as you see, CAD did gain strength, and where is it? It's USD CAD, right there. Yes, it's gonna go back up, and I'm gonna just open a tiny little position just for the sake of remembering that we did go back up. We'll use this risk management from here because I can't open the other one now. 0.42, 0.45, there we go. Okay, so yes, it will go back up, and you can expect it to head towards the white moving average, which should be around the 127 area. It's a shame you got stopped out on that one, Johnny. You went by, yeah? Well, that sucks. You're welcome, Patty. So I'm going to continue explaining this a little bit more. I'm pretty sure it's not as simple as me just explaining it to everyone. This session is all about education, and I'm going to find. Yeah, I get it, Johnny. You know why I'm telling everyone to lower their risks, because that allows your positions to breathe more. You all need to understand that trading is not an hourly thing. We shouldn't trade today and make 50, 60, 100 pips, 150 pips in one day and be like, yeah, it's not that. It's, yeah, there's less stress. You need to look at the, Peter is really right. Peter, you should come work with us. But yeah, so what I'm trying to tell everyone here is that what Peter is saying is you'll have much less stress. When you're losing, let me just go to risk management. Let's go into risk management and we'll come back to the session. But before I go into that, I'm just going to show you 7 trades, okay? 7 very quick trades. Euro GBP, okay? We are at the purple line. This is very, very important. This is essential. I'm not telling you it's going up. I'm not telling you it's going down. I'm telling you we need to look at this. We need to be ready for something. A big move is coming. And that move is going to last minimum 500 towards 1,000 pips. Okay? Next one, GBP, JPY. I'm not even going to go into the other things, but I'm not going to put the trend lines, okay? We've just crossed. The last time we crossed, we had this, okay? That's the last time we crossed. That's a massive move. Do you know how hard it is to stick into a position like this? Because even if you open a 0.01 at a certain point here, and you say, hey, it's just 0.01, right? You don't care about this. Even if you have just 500 bucks in your account, 0.01 is not much. You can leave it there for a long time. You see, it's really generating, incredible results. It's 500 bucks at the top. Over here, it's 100 something. 0.01. That's really a lot. One lot is going to be much more than that. So what I'm telling you here, and I think we've sent the signal out, is this is going down. This is going down. This is long term. I'm not telling you to just start selling this right now. When I'm ready to start telling you to sell it, I'll tell you to start selling it. But that will, when I'm going to give you real signals, like I'm talking about do this, do that signals, that's going to be in that course. That's when I'm going to do that. That's when I'm going to really push you guys. That's when I'm going to really take you, let's say, under my wing and guide you as best as I can, not to only become excellent traders, but for us to become friends and understand each other and grow together. And I'm going to prove that trading is really something that can be taught. Nobody's born with this. Just like football, just like basketball, just like mathematics, just like everything else, it's learned. Somebody learns it with passion, with dedication. Now I have a hell of a lot of passion for this, and you all do as well. You wouldn't be sitting here on a beautiful day like Monday and listening to me talk. So the next one I'm giving you is USD JPY. Let's head to it right now. And here we are. We've just made the cross. The last time we crossed, similar scenario. Massive bull market. We just crossed. Just crossed. Look at that. Just crossed. We just crossed. That's insane. I'm talking about big moves downwards. It could retrace, of course, back up. But I'm telling you, mark my words, we'll talk in 2 months, in a month time, and you're going to see this thing way below 100, or even around the 100 mark, possibly even lower. The next one is gold. Here it is. Gold is right now breaking the level. The last time we broke it was here, and that's again in 2013. As you see, cycles are slowly changing, and it's not just on one pair. I've told you guys this even before, just with words. I told you that there is a big thing happening with the dollar. I told you that Euro USD would go up. I told you that GBP USD would go up. I told you USD CAD would go down. And I've shown you USD JPY. I've shown you as well that technically, forget about the moving averages, just technical factors are indicating that it's done. It's really done. There's no reason for the dollar to continue gaining strength. So if anybody is pro-dollar, because I am pro-dollar, I mean, I make my living of dollars, so I need dollars to be strong. But hey, you know, I lived with $142 versus the euro, so I mean, it's nothing that didn't happen before, just cycles. So on Friday, I did buy I did buy gold. I did get stopped out because I moved my take profits up. But I really believe that we're heading up. So gold up. CAD JPY. Let me just go into that real quick. I had this written down all for everyone here, just so you can have it. So CAD JPY, another cycle changing. This is a cycle. Basically, the purple one is just to identify long-term cycles. CAD JPY is breaking. I want to show you some. Oh, sorry, that's the hourly chart. Here we go. Just broke recently, a couple of weeks ago. And look at the move. Down. Okay. Then we have a triangle. Flag, basically a descending flag. Drop. 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 Just to pay attention to the moving averages. Once this broke here, you could actually start selling, or even here, or even here. What we need to do is have a big enough stop loss to sustain when we're trading long term and we're trying to trade trends. I don't think that I found a better time to do this. I'm so happy. As soon as I came back, I looked at these things and I was like, oh my goodness, I was waiting for this for a very long time. Next one, GBP USD. We do have a break here as well. Just a sec. Okay. I think the cycle is about to change here as well. We did try to change here, but we couldn't. But we're coming up pretty soon. Okay, it's coming pretty soon. As you see, the cycles change frequently on this pair. But I think it's going to change. Also, I just want to show you this. You see the recent change in short-term movements, especially the 55-day and the 20-day, indicate quite a bearish move. I also showed you that if we passed 45, you all received an email about this. If we passed 45 and broken it, we would go up. And it did, and it's going. The next one is New Zealand JPY, and there's a recent movement again here. And once this is broken here, and I'm pretty sure if I do the lines on the monthly, we'll be pretty close to that area right now. We're right on it. You see, we're vibrating right on it. We didn't break it here, but that was just a fake out. Just the market trying to get us. So yeah, New Zealand could become pretty weak. Okay, my good friends. Now I'm going into something that's really important to have, and I will forever speak about this, and that's capital protection. Having a capital protection plan is basically something that minimizes losses and keeps profits safe. So basically what I'm trying to tell you here is that minimizing losses, keeping your profits, is a very important process of trading and investing. Most retail and even professional traders fail at this over and over and over again. Today, all I want to teach you is how to create and implement a capital protection plan into your trading system. Obviously, one of the first questions a novice or somebody new here is going to ask me is, what is a capital protection plan? So I'm going to tell you. This protection plan is set up basically to Well, like we said, protect to minimize your losses and increase your profits. It is a step that every single person who has lost money in this market has overlooked. The capital protection plan is a set of limits that determine the maximum loss a trader is willing to have, and even can also use a maximum profit a trader is trying to get, or a minimum profit a trader is trying to get per trade. Minimizing losses is a very important part of investing, and this is the main reason why this protection plan is crucial to any kind of investment strategy. I've recently read comments on one of our pages where people were saying that, I never use stop losses. I don't need to use a stop loss. If you can predict the market, you don't need to use a stop loss. Who the hell can predict the market? I mean, even I here could just be wrong on everything I'm saying. So if I am wrong, what's stopping me from not losing all my money, going insane, losing my family, losing my house, losing everything? Well, stop losses, capital protection. We all take losses in trading and make a lot of mistakes with our trades. That will never stop. Never think that will stop. That can't stop. That won't stop. Now, what sets the great investors apart is the ability to recognize their mistakes, the bad choices, and use what they've learned to make up for it later. A capital protection plan, my friends, helps you to recognize your mistakes by allowing you to separate your emotions from investing. This is why I'm telling you, lower your risks. Lower them. Because the more you're looking at those profits and the more you say that, excuse my language, I was about to swear, the more you think like, I'm going to make more money if I have a 5% risk per trade. Well, I'm telling you, you're going to lose much quicker. So it's basically that story of the rabbit and the turtle when they're racing. The turtle wins the race, and the turtle wins the race because the turtle, slow and steady wins the race. Okay, so look, a feature that is very much overlooked, and that's this feature, basically risk management, is the one that helps traders the most. Now, there is something that I can tell you that you can do, and that's to add two maximums into your trade, and that is the maximum loss you're going to take and the maximum a minimum gain. Sorry, a maximum and a minimum gain. And then this will really help you. This will really help you a lot. What I mean by minimum gain is this. I have these free trades open, okay? My risk is really small. It's like barely one something percent, right? What I'm saying is that once this trade goes into a profit of, let's say, $4, $5, $10, I will move my stop loss into a profit, and I will say this is what I'm happy with. I do not want to risk anymore. Once I do that, that allows me to look for another entry somewhere else. So once I move my stop loss into a profit on Euro JPY, it will allow me to open another position with the same amount of risk. And basically right now, I'm almost trading risk-free. And I could be trading risk-free if my stop loss here is making more than this one here. Now, following this kind of plans and any other plan can be a very difficult procedure. We first expect that we're going to do everything. We're going to follow all the 23 rules. But that does not happen. I mean, we come back to reality. We realize that we're not following them. And greed's taking over. We just want to make money. We need to get those losses back. And by the time we're done, we lose everything. I'm going to try and make this process much easier for you, and I'm going to use that story I said about the free traders. These free traders are using exactly the same system. The only difference is in their capital protection plan. Now, I'm calling these free traders with three different names. One's trader number 1, trader number 2, and trader number 3. Trader number 1 does not use any kind of risk management. He simply opens trades based on his feelings. Okay, he thinks that this is the amount of money he wants to risk today. because he really believes that USD/JPY is going to shoot down even more. And all traders agree that USD/JPY is a very good trade for a sell. So trader number one risks anywhere between 1 and 10% per trade. Now, why am I saying this? I'm saying this based on facts, real figures based on the average trader with a lifetime of about 6 months. What I mean by a lifetime is this trader invests today, after 6 months he's done. He has no more money in his account, he's bust. So to break down this into an average of 1 to 10, 1% to 10%, let's assume that this person risks 5% per trade. So trader number one will be 50% down if he just loses 10 consecutive trades. This is assuming that he obviously sticks to 5%, so a 5% stop loss. And most novice traders, new people in the industry, or people who are basically down, they just stop using a stop loss after 20% or 20 or 30% drawdown. Meaning they will be out of the market like after 6 trades. They're done. I've seen many people stick to risk management. As soon as they're down properly because they're using a big risk management, they just go wild and they just open a big position, hoping that that's the one that's going to get them back. So you see, for trader number one to lose all hope and money, all he has to lose is between 10 and 15 trades, and he's done. He's finished. He's never coming back. What is even worse is that once he loses 4 trades, he is already down 20%. Do you guys understand? If you're risking 5% per trade, all you have to do is lose 4 trades, and you're down 20%. 20% is a big deal. And just two more losses, and you're at 6 trades. And guess where you're right now? You're in that little island where everyone's sitting there, grabbing their head, sweaty hands, and they really don't know what the hell they're going to do. Once you get to that island, it's really hard to swim out of it. I've seen people go there. You don't want to go there. Taking a loss of 10%, even 15%, is most of the time very easy to make back. It is when you're down 20, 30, or even more. That is when you're effed. And I'm not even swearing now, you see? You're done. Excuse my language, but I'm just swearing to get my point across. As you see, trader number one does not understand how long he or she is here for. Trader number one is simply here to trade day in, day out, play Russian roulette with his mouse, and one day he's going to be out of the market just as fast as he came in. Okay, so trader number two. Trader number two, as mentioned, is exactly the same trading system as trader number one. The only difference is in the capital protection plan. Trader number two sticks to a risk management of 2.5%, but generally trades with about 2% risk. Now, the law of averages dictates that just as much as we win, eventually we will have consecutive losses. Even if you have a win ratio of 80%, 90%, or 99.9%, you will need to have a couple of losing trades in a row. Now, the beautiful thing about the market is you can be up 1,500% today. You're up 1,500%. But for you to lose, all you have to do is lose 100%. Because you can never lose 1,000%. You can just lose your 100%. And that's much easier to lose. Okay. What I'm telling you here is that if trader number two, okay, let's say for trader number two, with this small and logical risk management, for him to go to that same island where trader number one went, all he will have to do is lose 10 trades with the risk management of 2.5%. And if he loses another 5 trades with a risk of 2%, then he's down 35%. And trading is not fun anymore. Being down 35% is not fun. You need to make more than double in profits for trading to actually be logically profitable for you. This is exactly why trader number 3 is the happiest of everyone. He is here for the long run. He grows his account by understanding the basic concept of trading. He always risks less than 1%, usually around 0.5 or 0.75. He knows that he will be wrong many times. But he understands that trading is not about a one-day battle. It is about a lifelong war. Using a risk management of 0.5%, trader 3 can have consecutive losses. He can lose 50 times consecutively and be down just 25%. He can also lose another 35 consecutive trades at 0.75 and be down just another 26.5. So he's just over 50% down after losing 85 trades in a row. So you see, what I'm trying to tell you here is that risk management, capital protection, is much more important than you think. And whoever tells you otherwise is either a fool or does not know what he or she is talking about. The essence of risk management is to protect what makes you alive. It is just as important as your brain is to your body. One cannot work without the other. Profits cannot be made unless you do not manage your risks, unless you do not manage your capital, protect it. Risk management is important because when losses come, and make no mistake about this, they will come. A capital protection plan will keep your losses small, manageable, rather than large and catastrophic. Now, for all of you to understand risk management at its best, I'm going to give you an even better explanation. And I'm going to end this session with this pretty soon, and then we'll continue on Wednesday. For all of you to understand risk management, I need you to imagine that investing is just like a triangle. It's formed of 3 main parts. 1 is return. 2 is risk. 3 is time. Now this pyramid is filled with water. Okay? So whenever you push one of these 3 parts, the other 2 will have to expand. So what I'm telling you here is if you wish to have bigger returns, then mathematically, the incorporated risk becomes much higher and the time frame needed to achieve these returns becomes larger. You guys following me? If you want to make bigger returns and push in the returns button, the time needed to make that will become bigger and the risks will become bigger. Same goes vice versa for anything else. You want to do it quicker, your risks and your rewards will become bigger. You want to increase your risk, time and money becomes bigger. If you want to do it quicker, well then your money and your risk becomes bigger. Now there is a very good relation between return, risk, and time. And I don't want you to focus entirely on the potential investment return. I want you to focus additionally on the incorporated risks and on the projected time frames of what you want to achieve. Always balance your investing decisions between these 3 factors, and I'm telling you, you will be rewarded. If you ignore time, you're going to probably get bored, anxious, annoyed, and you're going to probably increase your risk and probably go bankrupt. So the bottom line of what I'm telling you here is that money management techniques can greatly enhance your trading, and they will definitely eliminate emotions and they will reduce your risks. Obviously, making mistakes is just human nature. It's the process of learning. Once you realize this, you will find it much easier to move on from things and learn from your mistakes and losses. The next point is I want you to always remember your risk management calculators, use them, and always follow the 23 rules, which ironically pretty much begin with stop losses. That's where I'm ending it. Always use a stop loss and know in advance your exit strategy. So that's me ending this here. Does anybody have any questions for me? Because I've kept you an hour and a half almost. Heather, you're very welcome. It is my dear pleasure to tell you all of this. It's really important for me to have people such as excellent listeners like you and excellent doers. And I promise you I'll make you all amazing. Hey, Kato. You put a smile on my face every time, my friend. Thank you so much. Thank you so much. I really came here dedicated, uh, inspired to make this a really good session. Heather, I'm gonna add the rules right into you'll receive them right now. Just a second. Um, Ismail, thank you very much. Lisa, it's so good to have you back here. To have me back here, I'm really happy that I'm back. Craig, I'm really happy that you enjoyed it. Believe me, I'm really happy that I'm here with you guys. This is really important for me to be here and help everyone. Just looking for the rules. Just give me. Okay, here we go. Here they are. Okay, they're uploaded. They're uploading right now. Well, you know what, Craig? The things that I'm working on are gonna be absolutely bombastic. And I just want you all before you go to remember the quote I told you from Barry, and that's good judgment comes from experience, and experience comes from bad judgment. You've all lost money, you've all made mistakes, you've all there's so much involved into this. I just want to tell you that trading psychology is really important, and pretty soon I'm going to be teaching you all about that as well. But it will all be implemented in the course. It's going to be so much easier for me to do it that way. Heather, can you see the rules? Hey Peter, I'm really happy about this. I'm really happy about what you're saying. Can we? Actually, I'll mail you. I'll mail you. You need to receive some reports. Excellent, Heather. Well, the rules, actually, what I'm going to be doing, just a quick sneak peek for everyone here, is I'm going to be creating posters out of them. I'm going to be changing them just a little bit, but I'm going to make something really, really good for you guys. Something really good. I hope you all enjoyed the session. If you have any questions, you can mail me. I really enjoyed speaking to you all. I really thank you from the bottom of my heart for coming here and for spending an hour and a half with me. I wish you all a beautiful. Well, I think Peter's the only one in Australia right now. So, Peter, you have an excellent Tuesday. For the rest of us that are still in Monday, uh, just hang in there. Tuesday's around the corner. I wish you all a beautiful day and evening. Thank you all.